One of the ways to trade is to trade in the direction of the trend. Problem is finding the trend at times. And so one of the strategies we have is called the tick count trend indicator. And the way this strategy works is it looks at these indicators down at the bottom. There's one indicator that looks at, there's two other for reference just so you can visually compare. And the way it works is it takes a threshold on the tick symbol, New York Stock Exchange tick, and if it's below a certain threshold, then it adds one to the negative value. If it's above a certain threshold, it adds one to the bullish value. And if it's in between, it's a neutral value. And so you see on Wednesday, the red ticks are bearish, and those led the way. On Tuesday, the white ticks led the way, and so this is a neutral indicator. Again, on Thursday, the white ticks led neutral until about this time frame, and then it went bearish, and so had a short trade there. On Wednesday, we had three short trades, two which were profitable. That one got stopped out. It got back in and was profitable again, so 2 for 3 on Wednesday. The trend was down, and then on Wednesday afternoon, the trend was down, and so it shorted it again, so 1 for 1. And then on Friday, it was 0 for 1. The trend was up, and the bullish ticks were leading the way, so you buy pullbacks. But the market just rolled over here, rallied on a gap up, and then the president spoke, and boom, it rolled over. And so the second indicator is the same, except it uses a different threshold, plus or minus 200 instead of plus or minus 100. And the dynamic indicator down here at the bottom doesn't sum it out throughout the day. It just sums it up over the last 30 bars. It can also be changed, the number of look-back bars. There is a 30, that's an input that can be changed. We also have this in Tradestation. The data feeds work differently, so the ticks work differently. On Wednesday, you see the trades are the same. You see the same three trades, one profitable, one loser, and then one profitable. So 2 for 3 on Wednesday, and then no trades on Thursday or Friday. I've changed this indicator down here. Let me change it back because it's misrepresenting what we're looking at. Here are the indicator with the plus or minus 200 threshold settings in Tradestation, and you see the bears ticks lead the way on Wednesday until the late afternoon, and then neutral the rest of the week. If we want to be more aggressive, we can change it back to what I had before, plus or minus 100. You go in here and you change these to plus or minus 100, and anything above 100 or below will add to the bullish ticks, and below minus 100 will add to the bearish ticks for the day. And then you take a look at that, and you see the indicator, very bearish, bearish, bullish. Go back, Tuesday was bullish, Monday was mixed, but it gives you an edge in finding the trend, or if the neutral ticks are leading the way, you don't want to take trades. And so if you're bullish, it might keep you from calling tops. You want to buy dips in the market if we're bullish, and if the bears are leading the way, you want to sell rallies. What happens if I change the strategy to match the indicator? I need to change the strategy to go bull value plus 100 and minus 100. Take a look. It's more aggressive, so you get the same three trades on Wednesday. On Thursday, you get three short trades, all profitable. You're shorting rallies in the afternoon, and then on Friday, you get these three long trades. One loser gets back in, hits the profit target, buys another dip, hits the profit target. So more aggressive when you change the bullish and bearish thresholds. This is the update on the tick count trend trading system and indicators, and it's part of our 25K portfolio. So if you're having a hard time finding the trend, you want to check out the tick count trend strategy and indicator.